What's up, guys? So we'll be doing inventory valuation, also known as stock valuation. So the business, it is owned by Xing Li. They make use of the weighted average method for stock valuation. However, the financial year ends on 28 February 2019. The markup, it is given as 25% on cost. Required: calculate the following questions under value of closing stock using weighted average. So 2.1.1, guys, we need to calculate the value of closing stock using weighted average. Now remember, weighted average, it's for stock bought in bulk. So we have information B, which is you have your purchases and returns of television sets during the financial year. However, information A, those two balances are your balance at the beginning as well as balance at the end. So here your numerator, it's going to be the value of units, right? And then your denominator, it's going to be the number of what units available, right, to be sold. So basically this is your formula, and then you multiply by units at the end. So this is your formula of your what, your weighted average. So what is the value of your units unsold? Guys, you are given balance or your stock at the beginning amounted to 195,424, right? So it's opening stock plus purchases of 4,034,660, right? Subtract your returns of so you have the following 7 units from January 2019 purchases were returned to the supplier. So your calculation for returns, it's going to be 7 units multiplied by price per unit of so it's 5,512 each. So meaning the returns will amount to, so it's 38,000. So it's 38,584. So that 38,584, it's your what? It's your amount of your returns, right? And then divide by number of units. Units at the beginning was 49 plus purchases of 788 units minus 7 units returned to the supply. So overall you multiply by units at the end, which is how many units at the end? It was 220. So 220 units at the end. So meaning our closing stock will amount to it's going to be 1,111,000. So now we have our closing stock using weighted average amounted to 1,111,000. Now we move to 2.1.2. So you need to calculate your gross profit. So GB, it's equals to sales, right, minus cost of sales. So the original formula for your gross profit, always it's sales minus your cost of sales. Now you are given information C, which is sales for the year amounted to 3,450,300, right? This amount is for what? It's for sales. Now that you are doing stock valuation, guys, remember you have two systems. So you have your perpetual system, you also have your periodic system. Because of your syllabus consists of companies, so meaning we are focusing on your periodic system. Hence, when you calculate your cost of sales, it's going to be your opening, right, plus purchases, right, plus carriage, if ever you have your carriage on purchases, then you minus returns, right, then you minus your closing stock. So now remember our opening stock, guys, was 195,424 plus our purchases of 4,034,660 minus returns of 38,584, then you minus your closing stock of 1,111,000. So meaning our cost of sales will amount to it's 3,080,500. So now we have our cost of sales of 3,080,500. Now you go back to your formula, which is sales. Remember, our sales amounted to 3,450,300. You minus these cost of sales of 3,080,500, meaning our gross profit will now be given as 369,800. Right, so our gross profit will amount to 369,800. Then 2.2, the owner and the accountant disagreed on the method. So you need to ask yourself why. Of the stock valuation, the accountant wants to use what FIFO method. So 2.1.1, calculate the value of closing stock. We are now using what FIFO method. Now guys, when you calculate the value of closing stock using FIFO method, you need to check the table of your purchases. FIFO method, it's bottom up, right? So meaning our first month will be what? January. Our second month, so our first month it's what? January. Our second month it's October. And then our third month it's going to be what? July 2018. So first things first, you need to check how many units were at the end, or how many units on hand. Units at the end amounted to 220 units. So again, 220 units. So on 1st January 2019, you bought 200 units, right? So it's going to be 200 units. Remember guys, on these 200 units, you decided to take out 7 units returned to the supplier, right? As given here, that 7 units from January 2019 were returned to the supplier. Instead of taking 200, now we are going to take 200 minus 7, meaning units bought now on January 2019, it's going to be 193 units. So you say 193 multiplied by so it's 5,512, right? Thereafter you will get, so it's going to be 1,063,000. Yes, 1,063,816. Now moving right along, so you are sorted with your first year. We move to our second year, which is October. Remember, on January we said on these 220 units you decided to take out 193. What is left? So how many units left? 27. So now on October we are only looking for how many units, guys? So it's going to be 27 units. So it's going to be 27 multiplied by 5,145. So meaning your answer, it's going to be 138,915, right? Thereafter, your closing stock, you add these two amounts, meaning your closing stock is going to be 1,202,731. yes, so this, it's now your closing stock using FIFO method. So when you add these two units, when you add 27 and then plus 193, you need to get what? 220 units. So now you have the value of closing stock using weighted average, and then you have value of closing stock using FIFO method. Now let us check our 2.2.2. Explain the effect on gross profit if the FIFO method it is used. Now guys, so you need to check, a larger closing stock will result in a smaller cost of sales and hence a greater increase in your what? In your gross profit. So when you check your closing stock for weighted average, right? The closing stock for weighted average was 1,111,000, and then the closing stock for what? FIFO method resulted as 1,202,731. 8,713. So when you calculate cost of sales for these two amounts, meaning, as I've said, that a larger closing stock will result in a smaller cost of sales. So when you calculate your cost of sales for FIFO method, you will get an amount that is less compared to a weighted average. So every time when the statement explains why the owner decided to change from weighted to FIFO, it's because it is what tax returns, right? It's either you can say tax returns, right? Remember, tax returns basically it's what will result in increase in your what, in your gross profit, right? So again, a larger closing stock will result in a smaller cost of sales, hence you will have an increase in your what, in your gross profit, right? And then 2.2.3, as an internal auditor, explain the benefits of using FIFO method to the owner and the accountant. State 2 points. Point number 1, guys, right? The benefits of using FIFO method, it's going to be, it is easy to apply, number 1, right? It is easy to apply, right? And then benefit number 2, it's going to be no manipulation in your profit, right? In your profit. So those two are your benefits of using your FIFO method. And then we move to 2.3. So Ching Li feels that she was not able to achieve her target markup percentage. Bullet number 1, do or perform a calculation to confirm whether she is correct. So now our calculation for bullet number 1, you need to calculate your markup percentage, right? Guys, our formula for markup percentage, it's going to be gross profit, right, divide by cost of sales. Now that you are looking for a percentage, we're going to multiply by what? By 100. So our gross profit was amounted to 369,800, remember? And then our cost of sales was that 3,080,000, guys. So it's 3,080,500. And then after you multiply by what? By 100%, meaning her markup percentage achieved was 12%. So meaning our markup percentage, it is 12% achieved. Now bullet number 2, provide 2 suggestions that can be implemented in order to improve profitability. Number 1, you will say give, right, less trade discount, right, to customers. And then another way of improving profitability, it's going to be, it's either you can support a local customer, a local supplier. It's either you can support local supplier, right? So basically, guys, the theory, it's up to you whether you say give less trade discount to what customers, right, or support local suppliers to get cheaper products, right? That will minimize your expenses to accumulate. So guys, now we have our stock valuation. So stock valuation is for paper 2 under accounting. So again, see you soon. Hope you enjoyed the video. Cheers.